Right now, I'm getting storm ready. Supposedly, we're going to have a big storm in New England over the weekend. So on this beautiful Friday, I want to welcome everyone back to Finesse Fridays. On Finesse Fridays, I am going to break down the swings that occurred in the market that we took, not only the wins, but the discipline behind them. I'll cover today case management ticker symbol WM. That was a major mover. It was the only swing sent on an email that actually triggered, hit our target way before the actual earnings. I didn't want us to be in it approaching earnings because I understand that earnings is basically 50-50. It's a gamble. I understand some people's strategy is to get in before earnings, hoping that the company will beat so they can make major gains. But that is not strategy. Once again, it's a gamble, 50-50. We don't know if earnings will miss. We don't know if they will beat, but end up guiding lower. Is a lot of nuances. But one thing we know for sure is once that chart's set up and there's no major earnings announcement or news that is going to impact it, the chart will stay intact and the trade will do exactly what it's supposed to do. That's legitimate price action alone. Besides WM, I'll talk about MRNA, major move. That was the 1,000% return with the options off of the initial investment, talking about December 19th, provided in the small account challenge group. SBUX continued this week. Major movement, another 100% on top of last week's 300%, bringing the total options return to 400%. And then Boeing and WDC also continued. Let's get into these charts. Message today put a huge smile on my face. The reason for this in particular, because any mentor will be extremely proud of their students when the student is exiting based off of their own discretion. That's called empowerment. That's called understanding that you can control your own finances. And that's simply amazing. Not waiting for anyone else to tell you to exit, etc. So when I saw this, I was like, way to go, Totally Tumbler, AKA Brandon. Hey, congrats, by the way. I sold my last contract at SBUX. Total profit from this one stock was $1,679. This is the final contract that was expiring today. I absolutely love it. Now, one thing for sure, we're going to go to the charts because we discussed SBUX last week in Finesse Friday. I want to see the actual return on its final contract. It is almost, look, 179%. Simply amazing. We call this a runner. A runner is basically when you allow a contract to continue to move up with the dominant trend of the underlying security. Although this was a short week, massive gains were still made in SBUX. 4 days up since the acceleration in the breakout, as we can see here, based off of this chart. Short week because of MLK holiday on Monday. And as you can see, currently right now, SBUX finished strong. I want to actually take you into a new chart, and we're going to discuss WM. We know that Boeing, a trade in progress, still moved up higher this week as well. One thing I want you to understand is that the chart will give us signs when the momentum starts to look weak. And I can actually see it here with Boeing. I'm personally out of Boeing. When we look at WDC, it also accelerated up as well. Mainly on this particular day, which was yesterday's Thursday, it hit an all-time high. An amazing trend since this trade was provided. Similar to all the others where I can place a trend line and you'll be able to see the uptrend. I can start it here, doesn't matter. We can just see it's just swinging up higher and higher and higher. This week, 2 new swings were provided. However, only one of them actually triggered. So the similar thought process as last week where Disney did not trigger is the same thing that happened with one of the swings that were provided this week. It did not trigger, it did not hit entry. But what did was WM. And I'll go through it, mainly my thought process on making sure we were able to lock in profits prior to its upcoming earnings, which I believe is on January 28th. This is WM, and this is the trade that actually executed. It hit our entry point, and you can see it accelerated to the upside. This chart in particular, this is what I want you all to understand. Earnings, when I click on it, this is tradingview.com, Wednesday, January 28th. The goal with this setup in particular was to lock in gains prior to earnings. Therefore, we had great targets in terms of what can it actually hit prior to earnings, and we actually nailed it. When we look at this, I want you to see, same as the others, my whole thing is direction. If the direction is one way, we are going to continue to trade in that direction. It's just a matter of getting a nice breakout upswing to lock in some amazing gains when it comes to option swings. So buying the contracts. The contracts for these in particular had a great movement. This one is being able to lock in virtually between 80 to over 100%, depending on your strike price. Now, the thing is, when it comes to strikes, I usually tell everyone this. Strikes generally is irrelevant to me as long as the underlying chart, which is WM, is moving in the direction. All the strike prices are going to go up, meaning those option contracts are going to accelerate in terms of a greater return than others because of the Greeks that are within options. This is waste management. Our final TP was around $230. It came 13 cents shy, but this also closed this week pretty solid with a solid trend. The next ticker symbol we're going to get into is MRNA, Moderna. What an amazing mover, especially during the last 2 weeks. Just imagine the options returns. To be exact, if you had these particular contracts, over 1,000%. Let's take a look at the chart, and I'm going to show you exactly when I dropped it in the small account challenge group. And this has been amazing for our small account challenge members. The main goal is for the students to have the understanding and the thought process in which they were taught based off of our framework. So when I drop this and have them look at it, their eyes should be able to see exactly what I'm seeing. Moderna played out very well before any news. It's all based off of technicals, and it was a major mover. Here's a chart, Moderna. Look at the amazing upside, especially during the last 2 weeks. Simple as this. Here goes my trend line. We'll actually start it from right here. Huge movement, far away from this trend line, meaning price, the momentum, the buyers, all was going in one particular direction, and that was up. Therefore, if I point to this bar and we can see the return of 16%, on this day, this hit nearly like a 12%, and this is just the underlying shares. So if the shares are moving between 16 and 12% each one of these days, is equivalent to option movements giving you 200-300% returns, all based off of timing. But with that said, when I'm talking about a major return, is based off of the contracts that were purchased within this area. Next chart, to make my point based off of the major lesson of this Finesse Friday. Earnings is always 50-50. It's always a gamble. As traders, we must protect our capital. We must look for the best risk reward. Not only that, we must only focus on high probability setups only, all of the time. When you hear someone saying they're gonna get in options or trade prior to earnings and waiting for earnings to be the determining factor, just know that is a gambling mindset. Here goes Netflix. Just picture this. And I'm sure you all who are traders understand that there are traders that do this exact thing I'm about to say. Some will actually have a position on which is called a lotto, but I won't get into the concept of lotto. I'm just going to get into the concept of direction. Prior to earnings, we can see, this is a daily time frame, where Netflix was moving sideways in a channel. Imagine someone buying right here. They could buy shares, they could buy call options with the anticipation that price would break out. Earnings occurred because they're waiting for that huge movement to swing in their direction, hence 50-50 gambling, and it did not. So they had a 50% chance of being right and a 50% chance of being wrong. In this case, they are wrong. More than likely, price, gap below, and then you can see there, price never recovered, and it continued on its downtrend. So remember this, earnings is always 50-50. We do not gamble. Now to the question, did we finesse the markets? Or did the markets finesse us? You know the answer to that. We finesse the markets. For those who want the exact framework, we're actually providing it for free. Please download our framework. Happy Friday, everyone.